Good morning, traders. It is 8 a.m. Chicago time on Tuesday, the 22nd of November, 2022. This is episode number 2363. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick mic test, please, just to check. I'm starting from home again today, so it's hard to tell what's what. This morning, looking at the CT pre-market summary sheet, market is mainly bouncing higher in the indices as well as crude oil this morning. We have a mixed posture. We're really not pushing anything unusual. The S&P being higher by 20 points is not all that significant, and it's looking pretty healthy. Crude has had just a fantastic fantastic reversal yesterday. If you recall, coming into yesterday's session, I talked about crude potentially putting in a bottom and then starting to rotate back up, and then we watched it tank on news that Saudi is going to push for a 500,000 barrel per day increase in supply at the next OPEC plus meeting, and that just pushed us down. I'll go over that in a minute. As far as earnings, Best Buy came out this morning. Best Buy came in at beating its estimated earnings by 34%. Now, this is an electronics retailer. Came in at $1.38 versus $1.03. The revenue came in at 10.58 versus 10.31 billion. Medtronic came out today and was basically in line both on the earnings and revenue. Dollar Tree came out. This is also a retailer in line. And Baidu came out better by 10%, $2.35 versus $2.15 on 4.57 billion. After the close today, we get HB, Nordstrom, and Autodesk. In terms of what's what, really not much to say here. Thanksgiving week still in play here in the U.S. A lot of people are going to be gone tomorrow. Tomorrow is one of the busiest traveling days of the year. In fact, from Chicago to O'Hare's International Airport, which is the biggest airport in the area. There are two major airports in Chicago. From downtown Chicago to the airport yesterday was like an hour and 15 minutes on a light day. That ride is somewhere between 30 to 35 minutes. Just people fleeing the city for their vacation or family time or whatever. So I'm expecting more of that today and definitely a lot more of that tomorrow. So tomorrow's expected to be quiet. I'm still not sure if I'm doing a trader bite tomorrow, if it's even worth talking about tomorrow's trade. Not much on the calendar. Let me see. Tomorrow, I believe there was one piece, which is U.S. durable goods, and there's also new home sales coming in tomorrow as well. Durable goods and new home sales, FOMC minutes. But in any case, I'll only be around in the morning if I am, and I'm also traveling tomorrow to go see family. So other than that, China COVID cases just continue to surge, and the country is slowly imposing restrictions, and then we still have this FTX fallout. With a headline coming across just now, Genesis, which was a major player in the crypto space, is likely to experience a default as a result of FTX, is what they're saying. Not sure what the connection is, but we're going to continue to see more and more contagion as a result of this massive FTX failure. The guy's still running around. I think Bahamas or something. So this is all I've got. All numbers today on all releases on the calendar. A lower tier. This morning we have Eurozone consumer confidence flash expecting negative 26. We have Fed's Mester. We have Richmond Fed. We have Bank of Canada's Rogers, we have ECB's Nagel, we have an auction, we have Fed Speaker George, Fed's Speaker Bullard, who really moved us around last Friday, and then we have the API release after the close, with Australia wrapping up with Global Services PMI and Global Manufacturing PMI. So that's that. The S&P, 196,000 contracts, which is actually pretty decent for this week. So far, 44% of the volume is above yesterday's close, 34 points of range, which is relatively tight. This is basically what we saw yesterday. The point of control at 39.63, migrating up just a tad. So that's what we've got cooking. Looking at the overall market, yesterday really didn't accomplish much other than the fact that it broke the prior low. So we were one time framing down until Friday. Friday opened higher on a gap, closed higher. Looked like it was reversal. It might start pushing towards that 40-50 area. 40-50 area above. Yesterday, we broke that low and we took a flush, but yesterday was a very interesting reversal. As we broke the low, we found buyers very, very quick. So let's look at that here. Look at this thing. It broke through the prior low. This is the prior session low. This is the one-time framing threshold for one-time framing up. It broke right through. You can see there's some size trading in there, and then immediately came right back into the IB and finished sideways. This is a very swift rejection. This is a poke and return. You can see there was quite a bit of delta there. This is a poke and return back to balance. This is a market that is creating an excess. This is what an excess looks like. Very little volume down below. Volume of price down below. Comes right back into line here, back into the IB, and then starts to squeeze higher. Yesterday's trade was quite poor, in my opinion. A typical holiday trade. I didn't do anything with yesterday at all. I don't really have a setup for this, but there's just there was an opportunity. There was a couple of opportunities actually against the mid and VWAP, but it wasn't worth it for me to trade it, to be honest with you. So I didn't. So that's where we are. And then since then, what we've done is we open basically where we close, when open on top of settlement, we push up lower high on the swing from the afternoon, pushes back through the IB here, and then rejects it, comes back in, higher low, comes back to the mid. This is the mid, full session mid is dashed, and then we've been kind of trending up. And what we have is a multi-distribution profile. I'm sorry, I can't help myself. I gotta do this. Guy smoking. A multi-distribution profile, and we are holding near the upper end of the range. We couldn't do what I expected yesterday, which is to push into a gap to settle. Now remember, yesterday the inventory was like 96 or something like that percent short, and the expectation on the open is we would push higher to rebalance the inventory, and we did. We pushed higher off the open. We had a bit of a drive almost off the open, and then it just petered out, came all the way back, and then went sideways. Just went sideways, and to me, at first, it looked like it may trend up. It may actually get to the prior close and settle, and give us a gap to settle trade, a very key trade, and then continue higher, and it just failed to do so, and it just reversed, went to the low, and then just went sideways. Today, in the overnight session, we managed to get back into that settlement price from Friday in the overnight session, and what we've got is VWAP, mid, and the overnight point of control in the same spot. Price is higher. However, let's not ignore that VWAP, mid, and the overnight point of control are in the same spot. This is likely to be a magnet on the open on the way down. I'm going to be honest with you, there's just not likely to be huge opportunity today. When I look at the relative delta for some clues, we have a relative delta that really hasn't done much. I mean, it's just the small lots are above, large lots are below, so we have some dissonance here with the relative delta in the middle sitting just plus positive 680 contracts. Not much to speak of there. So to me, it's, you could see that yesterday's was very weak, the delta, so I didn't expect much on the upside yesterday at all. There was very weak lifting throughout the session. The only real lifting that took place is the flush below the prior low and the reversal, and then after that it just went completely sideways. This morning the delta is not indicating any key interest or direct interest at all. Looking at the bigger picture, I'm going to now merge these in. So you can see that yesterday was completely symmetrical with the Thursday, Friday trade. So I'm going to merge that also in to create a composite. And now we have a composite point of control at right on top of yesterday's settlement, right? So we have the point of control and settlement at the same price with the shape of the profile completely balanced. So when I merge this with the prior, you can see that we are right in the middle of this heavy kurtotic or heavy kind of profile area right here. This is really not, as I mentioned yesterday, between 39.90 and 39.50. For those of you who are here, between 39.90 and 39.50, there is just garbage. It's expected to be garbagey. It's very, you see, this is a balanced profile. This is a very concentrated profile. What this says is it's coiling for a run. This is likely to run from here. I doubt that it'll happen over the next few days. It could, anything can happen. But what we have is a higher coil. This may have us see a Santa Claus rally into December, and it's got the fuel to do it. This is what this is saying. Okay, so that's that. Looking at the intraday chart, let's switch and look at what we've got today. Here are the primary scenarios. Primary scenarios: open, push the overnight high. I'm looking for it to be responsive. I'm looking for this thing to come back to full session VWAP, full session mid, overnight point of control, come back. This creates, this morning, the big trade is a gap to settle trade. So we're going to look for how does it respond, or how does it push on the open? Do we have real strength on the open that sustains a push higher? If it doesn't, this is a huge opportunity. Granted, look at the range. This is a huge opportunity for a gap to settle short. So I'm looking for it to push the overnight high, which is 39.79, into 39.90 potentially, into up here, and I'm looking for any indication in the order flow that this thing's weak, and I'm looking for 39.90 back towards the mid VWAP at 63 and potentially a settlement at 58. That's the big trade of the day. So I'm looking for that as the primary scenario. That's the main trade of the day. The secondary trade is a continuation trade where we have an open auction. It takes out the overnight high because we're just hanging out at the overnight high. Remember, the overnight high is 39.79 a quarter, and we're sitting at 39.75.75. And so It pulls back just a tad, comes right back into the 75 area or so. We see a nice little iceberg here, bounces higher low, gives us an opportunity for a gap continue trade. Gap to continue trade. In that case, we have initiative buying, and this could run quite a ways, at least to the 4,000, if not to challenge the 4,009 from a couple of weeks ago before it peters out into the afternoon. This is an initiative buying scenario 2, and then the first scenario is responsive selling on a gap to settle trade. Okay? I'll leave you with that. Let me show you crude. Crude, very interesting action in crude here. Look at this. This is a thing of beauty. So crude, I put my homework up on Sunday night for Convergence members, and I talked about the very, very likelihood, since we pushed against this green zone here. That's the key support stock zone. We pushed against it. That was there already before we got there on Friday. It pushed against it, and it had a very good bounce with a close at high. Very bullish close on crude on Friday. The expectation is that it is likely to float above the key over-under stock zone, which is right there in the 81 area, and then to start pushing back. That's what I expected. That was what my homework was saying based on the auction and the price action. And it came in. Crude was a little bit off, and then by the time the trader bite was going on, crude was down 5%, and it ended up being down as much as $5 on an $80 settlement price. So it was down over 6%, and then it found a bottom here ahead of a key level down here. I have a key level down below. Found a bottom before and came all the way back to the scene of the crime. This is what we talk about when we talk about the SOC. This is a perfect example of how an auction, when interrupted, leaves a footprint, a scene of the crime behind, and we're very likely to discount that news. I mean, we discounted the news, but I mean, who are you kidding? This is like a $5 move. So you can't say I'll ignore news. I've never ignored news, but this morning we're holding steady. So this is a clear rejection of lower prices. The catch, however, for crude is that the VPOC got established at the low end of the range. This is quite negative for buyers. Any rotation down, this becomes a key target. Down here at 76.30, this number here becomes a big magnet down below because we managed to trade enough to shift the point of control to the low end of the range, a clear trend reversal day, and then we're pushing higher here, and we're likely to tackle the 83 over the next couple of days. But just a tremendous trade yesterday in crude. Tremendous action in crude, watching the auction unfold based on news. I'll leave you with that. Good luck today, and maybe I'll catch you tomorrow morning. I probably will. I'll catch you tomorrow morning, and good luck. Mind your risk. Be a trader, not a gambler. Take care.